Hello everyone, welcome back to our weekly market analysis video with me, Frankie, your market analyst at Markets4U. In today's video, we'll be looking at the key economic events and data releases from March 10th to March 14th, 2025. I've already set up my screen to display the economic calendar from the traders room at Markets4U. I've set the dates from March 10th to March 14th, covering this week's important events in GMT. Please remember to adjust to your respective time zones. Let's dive into this week's events. Monday starts with Japanese household spending data and Australian Westpac consumer confidence change. Tuesday brings Australian NAB business confidence, US JOLTS job openings, and Japanese PPI data. Wednesday features high-impact US inflation data including core inflation rate and the much-anticipated Bank of Canada interest rate decision. Thursday is packed with UK RICS house price balance, Eurozone industrial production, US PPI figures, US initial jobless claims, and Canadian building permits. Friday concludes with UK industrial production and GDP data, followed by the US Michigan consumer sentiment. This week's key market-moving events will be the US core inflation rate on Wednesday and the Bank of Canada interest rate decision on the same day. These releases should create significant opportunities across major pairs. Now, let's go to the technical analysis. This week, we'll focus on the US dollar index and the US dollar against the Canadian dollar, as both instruments are highly sensitive to the US inflation figures and the Bank of Canada decision. Let's start with the US dollar index. Looking at the daily chart, the dollar index has recently broken below significant support levels and is showing a strong bearish momentum. The price is currently trading around 103.53, well below the 20-day moving average, the red line, which is acting as dynamic resistance. Looking at key levels, we have support at 102.89 and 102.03, while resistance stands at 104.33 and 105.17. The recent break below the 104.33 level is particularly significant, as this was a strong support zone that had held since November 2024. The stochastic oscillator is approaching oversold territory, suggesting we might see a potential bounce, but the overall trend remains bearish. With US inflation data ahead on Wednesday, the index typically shows increased volatility during such periods. We could see the dollar index test the crucial 102.89 support level if inflation figures come in below expectations. Now, let's turn to the US dollar against the Canadian dollar. On the daily chart, the pair is currently trading around 1.4373, having recently pulled back from resistance. The pair faces an important Bank of Canada interest rate decision on Wednesday, where the central bank is expected to cut rates to 2.75% from the current 3%. On average, we've seen 51.31 pips volatility in the 4 hours following past Bank of Canada decisions. Looking at important levels, the US dollar against the Canadian dollar has strong resistance at 1.4484 and 1.4596, while support can be found at 1.4262 and 1.4157. The price is currently testing the 20-day moving average, which could act as dynamic support. The stochastic oscillator is moving lower from overbought territory, suggesting potential for continued downside. The 1.4262 support level will be particularly important to watch during Wednesday's Bank of Canada decision, as a rate cut could drive significant movement in the Canadian dollar. Both instruments could see considerable volatility this week. Traders should be particularly cautious during Wednesday's US inflation data and the Bank of Canada decision, as these events can cause sudden spikes in volatility and potential gap risks. Remember, always manage your risk carefully and never invest more than you can afford to lose. That's it for this week's analysis. See you in the next video.